Investors, there has been no better way to enter the month of December than on a fresh new record high in terms of my portfolio. So clicking right into Gitcoin, I just want to first show you, after a pretty stagnant week, that we are ultimately now sitting on a fresh new record high of $236,222, which is just out of this world considering just about a year ago, I was not even close to $200,000 in my brokerage account. Therefore, today, I want to go ahead and give you the inside scoop on my portfolio, as I always do. Not that too much has really changed this past week. Then I want to key you on some recent purchases, and last but not least, present you with a 2025 plan to actually get my portfolio to the next level, which for me would be over $300,000 in 2025. So with that, let me pop back open Gitcoin, which by the way, if you haven't been tracking your portfolio, Gitcoin is an incredibly easy and amazing tool to be using. Since using it, I can't speak highly enough about Gitcoin. It's really allowed me to organize and track my market wins. So there's a link down there in my description for you or pinned comment to go ahead and give it a shot. Regardless of the fact here, we'll go ahead and click on show more. We're going to get a portfolio breakdown. And here is where I really want your eyes. Right now, my portfolio is still heavily weighted in ETFs that make up about 45% of my portfolio before tapping into individual holdings, which equate to another 43% of my portfolio. And then, of course, this dwindling cash position. Here's where I'm going to be using a lot of these funds to dollar cost average into the S&P 500 as I do on a weekly basis, and my stocks in focus. Either way, right now, this position in and of itself amounts to over $26,000 or a little over 11% of my portfolio. Now, sector-wise, I'm going to say this over and over again because I'm well aware of my investor profile and have financial goals that I intend to actually reach, which is why I'm heavily weighted here in tech. That weights out to about 51% of my portfolio. From there, I head into other, which is that cash position and the alike. So we're going to skim over this. It's about 12%. The consumer discretionary sector, though, comes in at 10.3% of my portfolio. Then I have healthcare currently making up 9.2% of my portfolio. That's growing. Industrials coming in at 5%. Before I tap into financials at over 3% of my portfolio. Consumer staples coming in at 2.8%. Real estate at 2.7%, as well as energy and materials at 1% and under 1% of my portfolio. But now going even deeper into my portfolio and talking about my positions, I'm still here with Vanguard's S&P fund, ticker symbol VOO, dominating my portfolio, totaling out to over $55,000 at this point and growing, while layer 2 of the foundation comes in with Vanguard's tech ETF, ticker symbol VGT, amounting to over $32,000. But then I tap into my first individual stock position here with Apple, and that's sitting over $28,000 or just about 12% worth of my portfolio. From there, the cash position itself, which you really can see, it's quite a hefty amount. But moving right along, we're going to get into Alphabet, which is currently amounting to over $23,000. The total stock market with Vanguard's total stock market index fund that amounts to just under $20,000. And finally, we get into one of my stocks in focus with United Health. That totals out now to just over $13,000 worth of my portfolio. Then another stock in focus for me in the upcoming year, which is Visa, that totals out to nearly $8,000 or 3.2% of my portfolio. And then we start to get into much smaller positions here with Tesla at $7,500 of my portfolio, Realty Income at about $6,400, Lockheed Martin, which I would love to continue to grow, but at the current price, I'm currently holding off, but that's coming in around $5,400 of my portfolio before I come full circle here with McDonald's and Coca-Cola. Now, my reality is I only intend to offload or rather boot out more holdings in my portfolio, which is going to look a whole lot like me kicking out Vanguard's total stock market index fund and consolidate that fund, say, into VOO. Just a more strategic decision. And in terms of the immediate sells, should Realty Income, McDonald's, and Coca-Cola all flip net positive for me, these positions will be some of the first to go for the sole reason of none of them actually matching my investment criteria. Again, at age 30 and just having a lot of time in the market, I'm here to say that I want to hit my goals in 2025 to really get my portfolio up over that $300,000 mark. That's going to take focus and a lot of focus on high conviction stocks. Of course, I want all of you taking that same approach versus that shotgun approach I'm always talking about, which is investing into 30 to 40 holdings throughout the year. Ultimately, I didn't let this past week slip by. I did go ahead to buy some more shares of one of my stocks in focus, which was United Health. Now, if you didn't already know, I'm going to break some sad news to you. One of the United Health executives was actually fatally shot in New York during their investor conference this past week. And while this is incredibly saddening news, I have to say the stock itself did slide down into a bit of a red zone, around $609 per share, down from around $620 per share. So knowing I am just holding this healthcare gem, hopefully really for forever, till long-term future, I snagged another couple of shares that totaled out to about $1,220 spent on the week. Now that ultimately then brings me to 24 shares, so another 76 shares until a 100 share count goal with United Health before I'll actually switch to a different dividend stock and focus. But investors, there you have it. Just a quick portfolio update so you all at least are in the know with my portfolio moves when they happen. And now I want to know what you plan to do here in December, what you did this past week, what are your 2025 plans. Let me know all your thoughts, of course, on my portfolio as well down there in the comments. However, investors, I want you to go ahead and tune in right here to actually catch some of the investment mistakes that I personally have made that I want you to avoid, especially in the new year. And if you're not already subscribed, now's the time to do so. And until the next video, I will see you all there.